Hello, forex traders. Hello, forex traders. It's so nice to be with you again, once again. You're welcome to today's broad. I'm so excited because all the analysis I told you from my last video played as to the teeth. So for those of you who jumped in and capitalized on those trades I called out, GBP, USD, I think GBP, NZD, and I think Chef JPY thereabout. Those trades played out. You can go and watch my last video and see where the market is currently. Massive, massive, massive. So today, I'll not be doing analysis. I will just tell you at the end of this video, I will just tell you the pair I'm looking at trading this week, especially this today, come Monday. The trade that we just need to make money that is capable of giving you over 300 pips. I'll just explain that at the end of the video. But first of all, before we move to the nitty-gritty of the day, I want you to like and subscribe to this channel. Like, subscribe, and keep sharing this channel if you find value in whatever we are doing. So guys, today we'll be talking about time frames. What are the best time frame in forex trading? A lot of people come in and tell me this time frame is the best, that time frame is the best. Some people used to ask me what time frame do I suggest for them to be trading on? So I usually say it depends on the kind of trader you are. But I'm gonna tell you the time frame that actually works that that makes you not overtrade. I will tell you all the time frames, the profit and the cons, the pros and the cons of those time frames, and then you will choose for yourself. But I will give you my recommendation at the end. First of all, we want to talk about the time frame, uh, the time frame, the lower time frame first. 15 minutes. When I say lower time frame, I'm referring to 5 minutes, 15 minutes, 30 minutes, and 1 hour. Between 1 hour and 4 hours, say we can say they are the medium time frame. 4 hours is the medium time frame, while daily, weekly, and monthly are the higher time frame. Okay, so if you are a day trader or you are a scalper, you just want to come in the market and leave, then you should be trading the lower time frame, like the 15 minutes, the 30 minutes, the 5 minutes. The reason is because this this time frame gives you quick signal and quick take profit. So the market moves very fast in this time frame. So if you are targeting, your target is like from 50 pips below, the lower time frame should be your go-to, because this time frame, the signals come very fast and the market moves very fast as well. But if you are a swing trader, you like holding your trade, you are a busy person, you are working secularly, you are doing business, you don't have time to sit on the chart for a long period of time, you just want to place your trade and leave the market, then you stick to the higher time frames, which is the 4 hour daily, weekly, and monthly. Now, when I say weekly, monthly, and daily, you don't place your trades on these time frames, please, but you base your analysis on these time frames. You only take a trade on the 4 hour time frame. So what the higher time frame does for you, it helps you to see the general view of the market, where the market is actually heading to, okay, over time. But it actually takes time for the market to play out in these directions. But then they are more concise, they are more stronger than the lower time frames. Now let's go to the pros and the cons of these two time frames. The lower time frame will keep giving you signals. In fact, if you trade the lower time frame, you will have signals and the market moves very fast and you make money quickly. But point of caution here is you jump in and jump out. You don't stay long when you're trading the lower time frame, unless you are trading in the general direction of the market and your entry is spot on. But apart from that, if you're a day trader, you don't have any business holding trade overnight, you don't have any business trying to swing trade, just hit and hit out. So the lower time frame can give you 50, 30 pips, 20 pips, 50 pips max, and then you are good to go. But then the failure of this time frame is that it will keep giving you signals. And most times these signals are false signals. Because if I'm trading let's say if I'm trading the higher time frame and I know the market is generally bearish, the market is going down generally. And we know that the market moves impulsive and retracement, impulsive and retracement. So the retracement move in the higher time frame will be a very strong buy in the lower time frame. So when the market is making retracement in the higher time frame, in the lower time frame is buy, which is counter trading. So either way, you get signal buy or sell. In the lower time frame, you get signals. And most times these are junk signals. And that is why you see most day traders don't make money, because they stick to the lower time frame. They want to jump in the market and jump out. Yes, we know there are guys who are doing this successfully, but how many are they? Most successful traders who are really, really profitable, not those people who are hyping and doing content with forex. Those real traders who know how to trade, the successful ones, you notice that they trade with the higher time frame. The reason is because the higher time frame are better and more structured, and they are more reliable than these smaller time frames. So the smaller time frame will just give you profit. You jump in, you jump out the market. If you want to trade the lower time frame, please don't try to swing. You cannot get a swing trade in the smaller time frame. I'm telling you this for free. You stick to the higher time frame if you want to swing. So depending on the kind of trader that you are, if you don't have patience for your setup to play out, you can go to the lower time frame and be getting those signals and those junk trade signals. I can rest assure you that most traders, those most daily traders don't make money in the market. They don't make money. You win today, you lose tomorrow, you win, because the lower time frame will keep giving you signals. And most of these signals are wrong. When you win this one, the next one will be wrong, and you keep going back and forth. You are not heading to any direction. You are not going anywhere. You are win today, you lose tomorrow, you win in this trade, you win. If you take out of 10 trades you take, you see that sometimes 6 will become loss, 4 will become profit, and all of that. You are unstable. But then the higher time frame, first of all, the higher time frame is the direction of where the big banks trade, the hedge funds, the financial institution, the government, they trade, because most of them are swing and position traders. Some of them place their trade on January and takes profit by December or November. They swing, some of them hold, those are position traders who hold trade for number of months. Then swing trader hold trade for number of days or even max week. They can hold their trade. And higher time frame gives you opportunity to capitalize the market with more pips. You can target 200 pips, 250 pips, 300 pips. You can see the way I trade. So far from my videos, you notice that I target 250, 200, minimum of 200 pips upwards. At the end of this video, I'm going to tell you the trade that you should be trading this week that is capable of giving you 300 pips. That is for free. That is my no-brainer for free. But then it is only in the higher time frame you can get this. Then secondly, the higher time frame gives you confidence trading the market. No matter what the market do, the pullbacks the market do, it still goes in that direction, because after all, generally the higher time frame will win. Even if the smaller time frame is saying sell, why the general trend of the higher time frame is bullish. Those sell in the smaller time frame might just be a retracement of the higher time frame, and over time it will get to a level and then turn around and join the higher time frame and go to the direction where it's supposed to go to. So you see, the higher time frame always win. I'm going to show you an example of this in a live chart so that you'll be able to see what we are talking about. So guys, now, which time frame should you be taking your trade? Should you get a confirmation signal? I'm going to tell you my recommendation. Any time frame is good. I've seen people who trade daily time frame, but guys, daily, weekly, and monthly are not to be traded. That is not where you should be trading. You only go to those charts to analyze the market, to see the current trends, to see what the market is doing, and then you scale down to place your trade in the 4-hour time frame. Now, ladies and gentlemen, I want to introduce to you the time frame that you can get your confirmation signal before placing your trade. Ladies and gentlemen, I present to you 4-hour time frame. 4-hour time frame is a real deal. I'm talking out of experience. No textbook anywhere, even in baby peeps and internet, that will give you this information I'm giving you for free. The 4-hour time frame is a time frame that you want to be getting your signal. Why is it important? Why do I recommend 4-hour time frame? The 4-hour time frame gives you good trade. So if the market is not going to play out, the 4-hour time frame will first of all tell you that this market is not going to play out. That is why I use the 4-hour time frame as my confirmation signal and my exit signal. For those of you who are my tutors, who are my students, or those of you who have been watching you know how I exit my trade. It is the 4-hour time frame. In fact, this time frame is so powerful that it tells you that this market is going to buy, even if the market was selling in the lower time frame. At the close of the 4-hour time frame, and it turns back to be bullish, know full well that market is going to continue with the bullish side. It's going to reverse. It's about to reverse. That is the power of the 4-hour time frame. So if you are seeing a potential buy, and the 4-hour time frame has not confirmed it, please, my own advice, kindly wait for the 4-hour time frame to confirm that this is a buy. If it's a bullish engulfing bar, head and shoulder, whatever strategy your entry strategy is, wait for the 4-hour to confirm. Now, I'm talking about those who are trading the higher time, those who are swinging trade, not these daily traders who go to the 15 minutes time. Those ones you can use on a time frame that is okay with you to trade. But I'm talking about the swing traders, the position traders. 4-hour is where you want to go to. So if you are trading the lower time frame, you will not be making money. Why not sit down and reevaluate the kind of trader that you are and try this other side and see where it's going to be profitable? Now, the bad side of smaller time frame is that it gives you false signal and you attend to over trading because you are getting a buy signal here, you're getting a sell signal in the same chart, the same way you'll be trading. At the end of the day, you've traded like 10 times. You place 10 trades and not, you end up not even being in profit. That is what the lower time frame can do to you. It can keep giving you signal, false signal, and help and makes you to overtrade. And when you overtrade, emotion steps in, and that is why a lot of those smaller time frame traders don't make money. And most of the thing that will affect your trading is emotion. Once emotion step in, you start to revenge trade, and when revenge trade comes in, it is time to blow an account. I trust you. When you start revenge trading, you are blowing an account. You just blow your account. So that is the bad side of the smaller time frame. Some people say they like it because they are not patient to wait for the higher time frame to give you the signal. No problem. But you end up over trading and still lose money. After all, why are we in this business? We are in this business to make profit. So when I'm doing something that I like and it's not giving me money, why should I stick to that? You have to sit down and reevaluate yourself and try to transition to what will actually make you money. The end goal is to make money in this business. I've been there, and that is why I'm telling you. The market helped me to transition to become who I am today. And I'm happy that I've transitioned because now I make money, I make profit. Do I lose trade at times? Yes, of course. No successful traders, no profitable successful traders anywhere in the world that doesn't lose trade. Even those in hedge funds, they also lose trade. There is nothing like 100% in forex. Anybody that comes to tell you that my strategy is 100%, that just know that you run for your life because if you enter there, you see fire. No strategy that is 100%. I'm telling you that for free. Do I lose trade at times? Yes. But most times, I lose trade because maybe I didn't time my entry very well. But it's not that I did not get the direction. I know the direction. I always know the direction. Because the higher time frame helps me to know the direction. So are you going to lose trade? Yes. But overall, you will not overtrade and you end up every week in profit. In my Telegram channel, after dropping signals at the end of the week, we'll do analysis, we'll end up that we end the week in profit. The reason is because we stick to the higher time frame and we don't overtrade. So even if you take 2 or 3 trades in a week, at the end of the day, you'll still be in profit. While the smaller time frame trader have taken like 50 trades, and after doing much analysis, you end up that there is no profit because you are over trading, and most of those trades we are taking out of emotion. And that is what kills people in forex. And that is why you see a lot of lower time trader don't make money. I've seen somebody who trade the 1 minute time frame. I would just be looking at as wow. A lot of people, there is a lot of things in this business. People who trade for 1 minute time frame, 5 minute time frame, they're there. And they say they are traders. But the truth is that I'm not castigating them. I'm not saying that people they don't make money. But the question is, how many are they? What is the percentage of those time frame, those 1 minute, 5 minutes, 15 minute traders that make money, real money in forex? If they exist, they are very, very few. So why not do something that is better? Me, I don't like stress. And even the way I trade, my strategy is very simple. Just make it simple and you are good to go. So that is the pros and the cons of the higher and lower time frame. So you decide the kind of person, the kind of time frame, the kind of trader you want to be, and the time frame you want to choose. But for me, my recommendation, stick to the higher time frames because that is the real deal. That's the main the direction of the market. For me, you know what I do. I always preach the top-down analysis is what goes on in this market. So I analyze my market from the top, from the monthly, scale down to the daily, and then look for my entry on the 4 hour. That is how I trade. I don't go below the 4 hours. In rare cases, I go down to the 1 hour to get the precision. Okay. But I don't go below the one. I don't even care what happens in the other time frames because I get what I want from this other time frame. It gives me more stronger signals and I'm good to go. But I'm not saying that you that trade the lower time frame don't make money. That is not what I'm saying. But the percentage of those lower time frame traders that are losing money are high compared to those who are trading the higher time frame. So always wait for your confirmation from the 4 hour time frame. Go and test this and you thank me later. 4 hour time frame is the real deal where you confirm your signal. I'm giving this free. This is what I teach in my class, but I'm giving it for free for those who have struggled. Just go and check it out. Do your analysis, wait for confirmation. When you get that confirmation in 4 hours, I trust me that the market is definitely going to give you profit, even if that trade might not work out, but you will see profit, and then you have the opportunity to close before the market reverse on you. By then you still make something out of the trade, even if the trade does not hit your TP. The market must not hit your take profits because the market is not seeing you that your trade take profit. But then once you start seeing signs that this trade is not going to work out, the 4 hours will also tell you, you close, you take whatever the market gives to you. At the end of the day, you still make money. So that is that for that. So the lower time frame is good, it's fast, it gives you profit quickly, it helps you to go in the market and goes out, make quick money, but lesser pips. The higher time frame is slow and steady. The signals don't come often. The setup takes time, but once it forms and you get a confirmation, the capitalization, the profit is higher. It gives you higher pips. You tend to make the market higher and you trade less. So these are the two things that is in your hand. You decide what you want to trade, the kind of trader you want to be. So I've been able to put rest to this question, lower time frame trade and higher time frame, which one is the best? I've told you how I trade and I've also told you the pros and the cons. So you decide. So today I'll just go straight to my point as I promised you that I'm going to call out a trade that you should be trading this week that is capable of giving you 300 pips. Now I want to share my screen with you guys right now. Share my screen with you guys. Share my screen with you guys. All right. Done. You are welcome inside of my screen. This is Living on Forest. I just want to quickly call out a trade that you should be trading this week that's capable of giving you 300 pips. This is no brainer. Okay, so what you are looking at here is GBP AUD. Now, from what I told you from the time frames, if you look at this 4 hour time frame, you see that the market has been selling, 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 selling. It has been on the sell since Thursday, 21st August till date. The market has been selling. Yes. So the lower time frame, the 1 hour, 15 minutes will show you strong sells. You can see it's the bearish market. 15 minutes, they are all bearish markets. Okay. So every small lower time frame trader will be selling. That's true. But then we that trade the higher time frame, we know that this market is a buy market. So I am just looking for the buy opportunities because the buy opportunity is going to give me good number of pips. So when you come, how do I know that this market is a bullish? Let me bring a clean chart. Go to the weekly time frame. Let me clean up this shit here. Okay, so we'll go to the weekly time frame or the daily. Let's go to the daily. Now you see the market. This is a zone. This is a support level. Okay, so this is a support level right here. This is a support level right here. So generally, this market is a bullish market. If you can see, the market has been going up ever since October 2022. The market has been in an upward movement. Okay, so the market came. Now, these sales you see the market is retracing, consolidated and retraced. So it has retraced back to this level, this support level. So generally, we know that this market is a bullish market, but all of these sales you saw here are what we call retracement to start the impulsive move. And the market has currently retraced back into the support level. So from this now, from the behavior, the way the candlestick, the market is going down towards the support level. Is it going strong? We are reading the dynamics of the market. We currently see that the market is mild. The market has high possibility of reversing in this support level that it is currently. So at this level, we look out for buy. Now, so the market came here after doing this stuff. It bought, now it shows and it's going up. It has found support in this level, looking like a double bottom. Let me increase the volume so that you'll be able to see what are going. Okay, so you see, so we take here, all of these are liquidity grabs, the market reverse, and then the market came back here and is doing the same thing. Okay, it has respected that environment again. So we'll go down to 2 hours. We still see the same thing, this, and the market. So the strength of the cells has died, is dying. The strength of the cells, see that move, that's formed double bottom in this region. So JPP USD, JPP AUD will buy from this week. It's going to buy aggressively. And so we're just waiting for 4 hour candle to come in, confirm this. If this 4 hour candle close, this is Monday, mind you, today, Monday. If the 4 hour candle close as an engulfing bar on this, aggressive, strong engulfing bar, engulfing this, then that is our confirmation because which we've seen how the market came in that environment. We know that the sell momentum has died, is dying. And then if we see aggressive 4 hour candle that close engulfing this young man here, then we know that this buy has initiated, and then we will be banging the market. If you look, the market is currently on a channel, on the flag. It has formed a flag. Look at this. Sorry. Look at this. You pick this stuff here, connect it to this level, and then pick this other one. Let's say we run it like this. Okay. So as you can see, it formed a flag, and currently this candle has broken out of that flag. Most persons who trade like 1 hour is showing a breakout. Some person will enter their trade right now to buy, but I'm not going to enter yet. I'll wait for the 4 hour candle to confirm If the 4-hour candle close bullish, then I know that this buys has started, and then it's going to buy. So I'm just be patient, because if this candle is remaining like how many hours? Let's say it's remaining like 2 hours, 16 minutes for the candle to for the 4-hour candle to come to close fully. The market might just come even after even though the 1 hour has broken uh out of this flag. The next one can come inside and go down here. I've seen it happen. So, but if it doesn't do that at the close of the 4 hour, it will end up being a bullish candle that closes above this level. Then we know that the buys has initiated. Then we can comfortably take this trade. And where is our target? Notice, guys, notice very well that this market, where is it headed? If the market is reversing, it's coming back at least to this environment. This environment. That is where the market is coming to. But I'm going to take my profit around this region. Around this region. That's where I'm going to take my profit. And this is over. This is a how many pips trade? A 300. You can see over 300 and let's say 350 pips. 350 pips trade. But if we allow the forward to confirm, okay, let's say max 300 pips trade. 300 pips if we enter here. The market is going to give us 300 pips, guys. 300 pips. That's massive. So even if this is just the trade you took for this week and you're able to make 300 pips out of this trade, why should you overtrade? Because for the market to move this 300 pips, it's not going to happen in just one day. Okay? It might not happen in 2 days, although it's depending on liquidity, the volatility of the market for that week. Sometimes the market is highly volatile. The market moves aggressively. It might happen in 2 days. Even if it doesn't happen in 2 days, it takes 3 days for this market to bank 300 pips and you're able to hold it. You've made very reasonable amount of money. And even if it's that trade you took for that week, you are good. You've ended the week in profit just taking one trade. While the junk trader who has been trading the lower time frame, getting signal up and down, trading, even taking like 50 trades in a week or 20 trades, still end up in a loss. So which one is better? That saps your energy, but this doesn't sap your energy. It reserves your energy. It makes you to do other things that you want to do hands-free. So this is a better trade you want to take. So guys, I'm calling out this trade for you guys come this week. JPP AUD is going to bang you 300 pips. I don't see the reason why you aren't jumping on this trade. Jump on this trade, guys, and make money. And then come and thank me later. Give a comment if you take this trade and this trade gives you profit. Please come to the comment section or come to my channel, make a comment, try to thank me, because I know that people are going to make money out of this trade, this market. Come and thank me, show appreciation. I'm not asking you for money, but the only appreciation I ask you is to come and subscribe, like, and give comments telling me that, sir, the video I watched, I took the trade and I made money. Thank you very much. This is a way to encourage me to do more videos like this for you so that you will be able to make the market. So thank you very much, guys. This is just what I want to come and share with you guys. So I want to share my screen with you guys. So if you find value in what we're doing, please kindly like, subscribe, and share this channel. This is just Monday by 7:46 a.m. in the morning. So the market is still fresh. So the market has not fully closed. By 10 a.m. when the 4-hour candle close, we will now get the confirmation and see if you are going to take the trade or not. So please, if you watch the video, if you are the first set of people who watch the video, please kindly share this video, tell your friends so that they will also look at this chart, this JPP AUD trade, and look at how to jump in on it. So thank you very much, guys. I got your back and I want to sign out right now. See you in my next video. Thank you. I hope you find value in this.